that means we are live here. It is Tuesday morning, midday on the East Coast, 8/13/2019. We got a full crew here. We got Cody, we got Mark, we got Matt, we got Tim. Welcome out to Tackle Trading's halftime report. Matt, markets are running. Markets can't figure out what to do here. Down on a Monday, back on a Tuesday, kind of like last week as well. But now you've got matching candlesticks almost, Matt. We got some congestion, moving averages. What's your interpretation of the price action? Let's start with that.
You know, it was an interesting day here today. Over on the overnight futures, not a whole lot of things transpired, Tim. You know, and when you were reading the news coming into the cash open today, everything was pointing to a little bit of a downward, maybe not aggressively, but just a little bit of a fade action. And when you're looking at this from a 30-minute chart perspective, you kind of see what I'm talking about, that fade action coming into the overnight. Not a lot of, price action to the downside. Kind of settles in here right before the cash open. And then, Tim, on the cash open right here, markets just explode back up. And I'll tell you, usually you ask me how I'm doing today, and you didn't do that, T. And I was going to say I'm certainly not doing as well as the market today because like probably many traders got a little whipsaw coming into those triggers that happened on the bearish trades. And then obviously with the cash open. And I want to get your guys' interpretation of this because obviously the news here is very important. I think a lot of bearish traders today got a little bit of a whipsaw based on the trade policy. The news here today coming out, and it happened literally right when the market opened up. Mm-hmm. I don't know if it was Mnuchin or Lighthizer, but President Trump talked about delaying the tariffs that were supposed to be going on in September on $300 billion worth of Chinese goods. That was at 10%. They're going to delay that till, I believe, December 1st, number one. Number two, they're going to have and again, these are not my words. These are the words that came out of the White House, major revisions to those 10% tariffs as well, including revisions on cell phones, laptops, video games, footwear, clothing as well. A lot of these products that we sell to China and we import from China as well. What's your read on the news here? And I want to start here with Mark. Mark, what's your read on the news here?
And Mark is on the wrong microphone. I can see him moving his mouth, and there's probably
he was saying something very wise, though.
Very deep thoughts there. Very wise thoughts.
Very wise, Tim. While Mark's figuring out his headset very quickly, what's your take on the news and the price action that we saw coming into the cash open?
Obviously the price action is impressive if you're a bullish trader. It's so far from done, though. The market patterns have now moved into neutrality for me, Matt. You have one lower pivot low. You have pressure on the bear side from candlestick perspective, from a volume perspective, and just a volatility perspective. Last Monday, Matt, just a day ago, we talked about a 4% down day across many of the major indexes, 3% on some of the more conservative ones. I'm seeing a battle back in here. When Mnuchin is inspiring the market to buy, I'm cautious. All right. That's all I'm going to say right there. I don't trust it. I don't trust the news right now. I'm neutral. Personally.
Well,
Mark.
All right. Is my mic on finally?
You're good to go, bro.
All right. So this is our third go around on the trade war. We had March 2018, we had May 2019, and now this go, where the trade war has been front and center as the primary driving force in the market. Anyone who's listened to me on the Traders Lounge knows I have a trade war playbook. And part of that trade war playbook is you cannot trust what you see on any given day. Shorten your position, shorten your targets, because news can come out. And anyone who's listened to me in the last year and a half has heard me say this 1,000 times. News can come out any day and blow up your trade. So when there are good setups, it's not that you don't want to take advantage of them, but shorten your time frame, shorten your position size. If you are worried about news coming out the next day, which is what basically has happened constantly in this go around.
Well,
it's the most unpredictable thing. Because like unemployment report, we know when it is. A company's earnings, we know when it is. GDP, we know when it is. We do not know when the White House is going to speak. We don't know when China's going to speak on the thing. And it is maddening, but it's normal for the trade war.
It's a wonderful point because I was analyzing one of my students' trade journals a couple of days ago, T. Mm-hmm. And I was looking at it and I saw a trend that he would exit certain trades even if they weren't at targets on certain days over the last few months. And I asked him a question. I said, well, what's the commonality here? And I had spotted the commonality, but I wanted to see if he understood the commonality. And he's looking at it. He's like, all of those are on Friday, right? And he did not feel comfortable carrying any trade over the weekend. So he would just close the trade over the weekend. And sometimes that's kind of what we feel on a daily basis as well with these news-driven cycles. And the trade war is frustrating for everybody. I think everybody would agree that we just want, as a trader, as an investor, we just want that variable of the trade war and the news that kind of drives the trade war to kind of, put it in the rearview mirror. But it's going to be something that we're going to have to be dealing with in the foreseeable future. Obviously, good news coming out today at the cash open with the trade war, and we'll see if that has a tendency to stick. But even from a technical perspective, Tim, you couldn't call, even though it's a very, very bullish day, you can't call that a bullish trigger from a trend perspective, could you?
No, it's not a bullish trigger. I mean, there are bullish candidates out there. We have some good ones on the option and stock report this week, by the way. So there's always going to be bullish candidates that you could still put your money behind and feel comfortable with, whether it's a staple or utility or just a breakout on something nice. But that's why we call it a stock picker's market. Mm-hmm. From the overall broad market perspective, if you did break above those resistance zones, Matt, through the week, I mean, could you argue that we should go back to a positive 1 delta? I think you could make that argument. Until then, though,
if you break back up above 29.40 here, and you got pretty solid level of support over here, very solid level of resistance over here, and then when we're zooming into the cash open here, that is an explosion. That's a 40-point candle in 30 minutes, guys. That's an explosion coming into the cash open. And where does it kiss off of? That exact level of resistance. And when we were in the pre-production show, Mark made a wonderful point that that's not human beings. That's not human beings getting into that. That's twofold. Number one, you had the positive news coming into the market at the cash open, but there was a lot of traders who were short market coming into yesterday. Can we all agree with that?
Yeah, I think a lot of short-term traders from a delta perspective would have taken the triggers, the pivots,
algorithms too.
Yeah,
right. Sure. Algorithms too. So that's some short squeeze there going on, as well as the traders who were short going into yesterday on the positive news on trade. They're saying, okay, let's capitulate for the short term. Let's see something else set up. And now it's presenting a fairly interesting opportunity from a bullish perspective, from a day trader perspective as well. You see that 29.40. If you can get back up above that 29.40, Tim, you certainly have room for the price to run, most likely up into that 29.60, 29.65 by 29.80 level. So it's going to be interesting to see this market throughout the rest of the trading day, because I do believe you're at a very, very important intraday resistance point at 29.40.
I do as well. And we're going to break all the action down across indexes and some of the other picks. By the way, on Tuesdays, we do our rapid fire section at the end of the show. So stay here live, engaged, and be ready to pop in a couple of symbols for us.
Trading Rules makes a point in the chat here, Tim. There were also algo dark pools trading Apple. Apple skipping 7 to 10 cents during the actual trading day. That's not human beings.
Yeah, bring up Apple, if you will. I actually was just looking at that one in the headlines as well. I mean, some of that might be just that one instance of the news actually directly impacted Apple so much, because a lot of the tariffs that they're going to pull are on consumer products. Yeah, I mean, it's Apple Computer here, so I get it. Skipping 7 to 10 cents is not common for an Apple Computer, but boom, that hit and that drilled that stock almost immediately. It has some upside here, Matt. There's no doubt.
Look, that cash opened so strong on Apple, so strong. Hits 212, bullish retracement. Now you're fading coming into that intraday level. Easy stop loss under 208, easy trigger above that high at 209. I think that's a good J trade right there on Apple.
I do as well. And I'm looking at the heat map. It's not just Apple Computer. You have strong action across many of the different tech names: Facebook, Google, Microsoft, Amazon. They're all up 2% or more. Apple just happens to be at that 4% mark because it's so directly impacted by trade war relationships. The industrial sector is running. I got to give credit where credit's due. General Electric up 4.5%.
Well, did you hear the news?
I did not see individual news on that one.
The CEO purchased, I believe, 350,000 shares or something along those lines at a cost basis of, I believe, somewhere around $9.07.
Hey, listen, after the earnings report last quarter, I came out and said I was impressed by the CEO. I was impressed by the statements, and they're starting to move in a better direction. GE is a huge dividend payer on a reversal signal here, Matt. I can't touch it.
No, of course not. But I will tell you, the CEO is probably looking at that support level at $9 and saying, "Hey, listen, I like this support level at $9. It is a very, very strong level of support, Tim. You have old resistance over here, support, 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 and obviously support here. I don't think it's I don't think I don't trade GE and I don't invest in GE, but I could certainly understand somebody picking it up at $9.
If they can stabilize some of the bleed off certain divisions and a couple of earnings reports coming back through, I actually think it could be a good dividend player, but I'm not anywhere near there yet. I just saw it on the heat map looking pretty strong. You got green across the board. The only one that I'm seeing notably down here today, Matt, Netflix is down 0.25%. This company has had just pressure on it since the earnings season, pretty much all year long. It has underperformed. Not an impressive day when Netflix is down even at all, and the whole market is up, but c'est la vie, I guess. It is what it is with Netflix. What would have to happen with this stock for you to get interested in it again?
Quite a bit. I mean, quite a bit. It's significantly underperforming the market. Had a negative earnings report, lost subscribers for the first time in Netflix's history. I would have to see weekly chart reversals to get interested in Netflix at this point.
Yeah, it's still on my bearish watch list, a breakdown actually, and it goes back to the stock pickers market. I mean, the volatility on a day-by-day basis is frustrating, I know, but we do have some bearishness across certain areas. This short-term bump here with Mnuchin and with the trade war pulling tariffs, we'll see if it has any carry-through. On the broad markets, there's going to be a lot more action to settle in, and just this one morning does not settle it.
Well, and I think the Hong Kong protests are going to play a role in this too. I mean, we did have some positive news coming out of the Chinese-U.S. trade war today, but it's getting worse over there from a protest perspective.
I mean, seriously, think about the last week, the last 7 trading sessions. If you let emotions dictate on one day's price action without analyzing the big picture, last Monday, oh my gosh, the sky is falling, got to get out of everything. The next couple days, oh, we got to go bullish now. Start the week, we got to go bearish. Now we got to go bullish. That's the trade war. Don't let it mess with you. Realize that while this is not normal price action, it is kind of normal for the trade war.
Yeah. And all the while, Theta still is cracking around neutral.
Theta traders love this stuff.
And Theta positives probably just fine in this environment. There's a lot more to be settled here, Matt, on the S&P. I don't see a lot of notable difference on the Dow, though, by the way, or even some of the major indexes, even the NASDAQ. I still see kind of some risk and some back and forth and even a potential head and shoulders developing on the Dow. The NASDAQ, I mean, I know we have strength in Apple today, but that chart is not. It's not a strong chart. It's
the index is when you are news based in a market like this, and it's very, very concerning with the trade war. Every one of those indexes, when you have volatility come in, is going to perform exactly the same way outside of the Russell 2000. We talked about that many, many, many times over the last few months. So when you're looking at the NASDAQ, S&P, and the Dow Jones in a news-driven market, and they're all algo-driven right now, both on the upside and the downside, they're all going to look almost identical to one another. So that you're not going to be able to say, okay, let me go look at NASDAQ versus S&P. They're all kind of doing the exact same thing right now, and they're going to do the same thing until we get focused more based on technicals than news.
Yeah, I agree with that.
Which will happen. The news comes and it goes fairly quickly.
By the way, I got a question here from Lewis in the chat. Could you please review the option Greeks for at least one option, please? We're not going to do that in the halftime report, Lewis, but here's a guide you can download.
That's a Trader's Lounge right there, a question.
Yep. Or even go get the option Greek guide that we built earlier in the year, Matt. That's the link I just dropped in there. That'd be a good one for you to review. There's also some videos, and it would be a great question for the Traders Lounge as well. Yeah. Matt, keep moving through the markets here. Let's look at the RTY if we can. Talk about any notable differences there. I'm still neutral, but still cautious and very well aware of that 1450 kind of range down here on the bottom.
1450.
Yeah.
Notable today that the Russell 2000 once again is underperforming the recovery in the broad market, and that's just something we've seen in the Russell 2000 since October of last year. So the Russell is noticeably weaker than the other indexes, and I certainly would not be looking to buy stocks in the Russell 2000 right now versus some of the other indexes.
Yeah, I agree with that. Bring up FXI just so that I can talk about Hong Kong here for a minute, Matt. The news is not exactly coming out very positive there. It doesn't seem like they have resolution anytime soon. In fact, more risk. Hong Kong leader Carrie Lam said Tuesday that further violence involving the protests could push the territory down a path of no return. Are we properly assessing the risk of this situation?
You know what? Yesterday, I didn't think so. And I was just like, okay, it's protest. It's been going on a couple months. They shut down the airport. But then I started researching it a little bit more, Tim, and that's a very volatile situation. And Jim Rickards, who I follow on Twitter, and he wrote the book Aftermath, and it's going to be a book that we talk about on the Trade Justice podcast here in September. So definitely go pick up that book if you want to follow that conversation. I'm looking forward to reading that book. He tweeted on Twitter yesterday that he was talking to a fairly high-level Chinese expert, and his concern was the Chinese military would intervene here, very similar to what happened in the Tiananmen Square incident in 1989. So obviously, that if we do see an escalation with military intervention to stop the protest, that's going to have some geopolitical type risk involved. There's no doubt about that. I mean, Tim, the Hong Kong airport is one of the most utilized airports in the world, number one, but the fourth largest exchange in the world is also the Hong Kong Stock Exchange. And so there's obviously, in Hong Kong, I think represents what, 5% of Chinese GDP right now. 20 years ago, it was like 20%, but it's like 3 to 5% right now, Chinese GDP, which obviously is very, very important. And if you're going to see an escalation in those protests, it probably will trickle into some degree of economic concern. And if it trickles into an economic concern, you certainly have a stock concern in that capacity as well. So at this point, no, I do not think I do not think we're properly assessing the risk that could expose if it does get escalated. If it does not get escalated, I think we're perfectly fine from a risk perspective.
You know, some of the data behind Hong Kong is really interesting. Once you said it's one of the largest trading centers, I already know that. You've been there, actually. It's a pretty impressive city, man.
It's an amazing place. If you've never visited Hong Kong and you have a desire to travel to the Asian area, Hong Kong is amazing. I love that place.
The Hong Kong dollar.
Wait till the airport opens back up.
We'll wait till the airport gets there for sure.
I want to be landing there today, Cody. No. I wouldn't be traveling a nice little family vacation during Hong Kong protest week.
Yeah, I would not either. Obviously, we're going to continue to monitor that and see what happens as it develops. It's going to be fascinating as we go. Give me the dollar if you do, real quick here, Matt. $sign DXY rallying here today. Obviously, currency markets, you've been slightly bullish. You've maintained a bullish rating on this for some time. This breakout, you got to like it. There's no question about it. What's your read?
Two things. Number one, it was on the backs of a positive CPI report. The CPI report came in at 0.3%. That was based on the expectation as well. Both of them came in line with the expectation. And this is why, if you trade currency, this is why understanding economic reports are so important. There are two moments in time during the 24-hour cycle that currencies have a tendency to really kind of move. The first one is when the bank opens up. And when a bank opens up, you typically have a little bit more currency transactions. Traders start trading that currency and so on and so forth. So there are four major banks in the currency market. You have the Australian bank, you have the Japanese banks, you have the European banks, and then you have the US banks. Australia opens up at 5 p.m. Eastern Standard Time. Japan opens up at 7 to 8 p.m. Eastern Standard Time, depending on daylight savings. You have the European markets open out of Frankfurt at about 2 a.m. You have London open up at 3 a.m. And then you have the US open up at 8 a.m. And so those when the banks open up, you typically see some degree of increased volatility in the currency, and you see a breakout one way or the other. That's number one. Number two is when economic reports happen. Economic reports are the number one factor why currencies have a tendency to move up or down. And there's economic reports every single day. You have intermediate economic reports, you have major economic reports. The CPI report is a major economic report, one of the number one indicators that the central bank utilizes in determining monetary policy. And so when the CPI report came out right here, you started seeing the price appreciation as you always see on a positive economic report for a currency. You see the currency appreciating value. On a negative economic report for a currency, you see the currency depreciate in value. And we had a positive economic report coming out of the CPI report. The dollar increases in value. And the question is going to be, can we close above this 97.71 level? And if we can close above that 97.71 level, you most likely have some degree of confirmation. Now, I'm personally looking at the 97.80 level as confirmation as well. But I have maintained my slightly bullish stance on the dollar, and I'm going to continue to maintain that. Even if we do get a breakout, I'm not going to go more aggressive on the dollar. The dollar's been extremely volatile lately, but it does have a slightly bullish rating for me.
You know, we rarely pull this chart up, but bring up /ZN, if you will. And let's talk about the 10-year Treasury note, because tied to the dollar conversation, obviously interest rates. I got a call from my mortgage broker yesterday saying, hey, you better refinance your rates here soon. We got locked in low rates for the 30-year bond. I'm thinking, well, yields are tumbling. I might be able to wait on this a little bit. I'm not too much in a hurry.
But you understand the yield curve. You understand interest rates and market cycles and all of that. But how many people are getting those calls today and they're like, oh my God, let's refinance right now and pull the equity out?
I was thinking this yesterday. I'm seeing ads all over like Facebook, Twitter, just like the refinance your mortgage. They're everywhere. And it's because
the emails, I've gotten emails, text messages, phone calls. I mean, I'm like, yeah. I'm good. I'm good. I think I can get a lower rate, maybe not zero, but I do think I can get a lower rate down the road.
Well, and we're looking at the 10-year Treasury here, by the way. And if you never have tracked a bond chart, when bonds go up, yields go down. That's the relationship that happens. So people are buying the bond, forcing the yield lower. Here's some data, Matt, that's really interesting. The 30-year rate, which is where the mortgages are tied to, is down to 2.08%. That's like a record low in 2016 when it hit that. It's getting closer. It's about 14 basis points from the record low on the 30-year note. The 10-year note at 1.65 is nearly at the low point it's been for the last 10, 12 years.
What's the 2-year?
Only 5 basis points away from the 10. So you have a flattening yield curve in a way to where we're almost to invert here. I mean, these are recessionary signals. Now I know the old saying on Wall Street.
Well, those curves have been flat and been inverted off and on for a while now.
Yeah.
We were talking about the hypothetical inverted yield curve 2 years ago.
Well, and that's what I was going to say. I mean, the yield curve does not necessarily always predict a recession or a bear market.
Can we also agree that recessions and bear markets don't happen overnight?
Correct.
I want to know, if I refinance today, even though I think down the road, is the cost of refinancing going to save me enough money, and then I could refinance again in the next 6 to 12 months?
I had the math question myself for the guy. I'm like, all right, so what's the cost of the refinance? How much will it save me on a monthly payment? All right, so it's going to take me about 9 to 10 months to pay off the cost of my refinance. I think I'm going to wait for a better rate, right? So it's about cost relationships, right? I mean, that is what it is.
I mean, I've been doing that math exercise lately, because you want to save money, but you also got to think big picture too.
Sure. Yeah.
My projection is the Fed's going to zero interest rates. I'm waiting.
I have some of the same feelings myself.
Well, I know they're not raising rates.
That's the thing. What's the risk of waiting if they're not going to raise rates?
$150 on my mortgage payment. That is a lot of video games at Nickelcade.
There's a lot of video games at Nickelcade.
Either way, I mean, it does represent a risk-off environment where money is still floating into the bond market. And maybe even from a big picture perspective, I want to get both your take on this. We see money flowing into gold. We see money flowing into bonds. And the stock market also has money up here today. But is this move institutional in nature? I know it is what it is. I mean, Matt, you don't think so?
I don't believe this move is institutional. I don't think the institutions are coming in on today and they're saying, okay, let's go full bull mode today. No, I take today's price action as pure algorithm driven.
I think people using institutional language to try to explain moves is the most overused thing in market analysis.
It's the laziest analysis out there.
It's like, well, it's going up. It must be no.
Who has the money to drive the bond market the way that it is run, though? I mean, that has to be.
Algos plus when everybody's doing the same thing, it is a cumulative effect. And let's be honest, the bond is by its nature kind of institutionally by its nature.
How annoying has it been over the last 5 years, guys? To like every time the market's going up, Twitter finance and Wall Street and the news outlets, institutions are buying, people are buying, but then when the markets go down, blame those damn algos. Right? I mean,
it's all algos.
I think it's lazy analysis. It's all algos.
Yeah.
Jim Leahy on the Trailer Park Boys would say it's all liquor and it's all good. It's all algos all the time,
Yeah.
So just accept it. That's what runs the market. Forget your institution. That's your grandpa talking. That's your grandpa on the front porch yelling at the kids to turn down their music. Institutions don't matter. Algos drive the market these days.
90% of price action in the market is driven by algorithms. Today's price action in gold, today's price action in the S&P is not institutional driven.
Yeah. Yeah. What about the last 2 months movement in bonds? I mean, is that institutional? Because I can understand algos catching a trend.
I could see that being institutional.
But bonds are kind of the exception to the whole rule. Because I mean, bonds are kind of institutionally, and that is a new word here on the halftime restart. Institutionally,
I did like that one, Mark.
They're institutionally by nature, because your mom and pop investor really don't buy bonds. It's almost all mutual funds and
isn't the rule of thumb with bonds? It's old money. It's old money.
Yeah,
right?
big money. Yeah,
it's big money. That's kind of the bond market. It's old money. It's the generational money that's securing wealth and so on and so forth. So
it's money that hasn't learned how to read a chart or a market situation is what it is.
People that inherited billions of dollars don't need to read charts.
Well, and they're flying into that safety right now. I mean, they are. However you interpret it, they are. That's why the yields are coming down for months in a row.
It's because they think they have a binary choice. Well, I got to buy equities or I got to buy bonds. And they think there's this binary choice, and that's the entire limitation in the market. That's how stupid the 32-year-old guy you're sitting across on as a portfolio manager when you go into. I mean, that is the binary choice they have. It's like, well, and buy equities, buy bonds.
Can it be as simple as this, though, guys, that many people project a recession given the fact that we're going through a slowing growth environment around the world? Can we agree with that?
Yeah, I mean, they're looking at Europe.
And if you're faced with putting your money somewhere and you can get a bond at 2% or 1.6% or 1.8%, you can go out there and secure the money you've been making over the last 10 years. I could see institutions going into the bond market and saying, give me a 1.5, give me a 1.75, give me a 2% bond. As yields go down, that bond becomes more valuable to the marketplace, and it's a safe haven asset. It's very similar to why gold's going up.
I think it's one of the most complex market conditions that we've seen in a long time, Matt. Because of that, I think a lot of people are looking for a flight to safety because they want to avoid the risk of the trade war, the European economic recession potentially coming down the road, global economic slowdown. You've got all these things going on, but then there's no money in safety. I mean, gold has had a tremendous run, but we're not talking about a huge asset. This isn't $1 trillion market, gold here. No. This is a smaller market relative to everything else. There's no real money in the return of the bond market.
Well, no, but the bond market dwarfs the commodity market.
Yeah.
The bond market's $600 billion on a daily basis. It's massive.
Listen, I've never managed trillions of dollars. So there might be complexities to trying to get 1.7% on a percentage of money. But I know for the vast majority of everybody else in the world, if you can't make 1.7% doing the most conservative theta strategies there are, then I
know, but if right. If you're managing billions or even hundreds of millions of dollars, you don't have the liquidity in the options market to be able to.
And that's what I say. It's like for your Warren Buffett's actually talked about this. He's like, it is much easier. Like he was talking in terms of like, if I had $1 million, if I had $2 million, it's so easy to get bigger returns.
Oh, absolutely.
And Buffett talked about this. He's like even with a couple $1 million, it's really easy to get really, really, really nice returns. The complexities are as you have these huge, massive piles of cash, to do with.
Take what we talked about with the GE CEO earlier today. I think he currently owns like 900,000 shares of GE.
Right.
Good luck writing out 90,000 call options.
No, and that's the complexity of money. I mean, that is true at a bigger picture level, which is why, Mark, I always find it interesting. A new trader, new investor who, when you tell them, hey, maybe you're going to target 20, 25% on the year, some people skeptically, like, well, I don't know if I can make that. I've always made 6, 8, 10% or whatever it is.
Warren Buffett said, if I only had $1 million, and I remember, I'm paraphrasing this. He's like, if I only had $1 million, I guarantee I can make 50%.
I remember that too.
I would put the very bottom of Warren Buffett running $1 million account at 36%.
I mean, and then he thought, there was like a pause, and then he's like, yeah, I guarantee it. Yeah. I mean, but he's like, he can't get that kind of return with, hundreds of millions of dollars, billions of dollars under management.
Trade $1 trillion account.
But, hey, for all of us, think about what Buffett said. He said the principles of investing, trading, identifying all of this, these really high returns are very obtainable. And that, that was right out of Buffett's
Buffett was talking about covered calls and capturing dividends.
Yeah,
and naked puts. He does those naked puts.
He was not talking about being aggressive. He was literally talking about cash flowing with covered calls. That's what he was talking about.
Yeah. And I'm not sure that he does.
Let me answer Steve's question here.
Yeah.
Steve, great question. Why does Warren Buffett not believe in technical analysis? Number one, Warren Buffett is a value investor. That is who he is. He is one of the number one, if not the number one value investor in the world. He was literally the mentor student of Benjamin Graham, who wrote The Intelligent Investor in 1952. And in 1952, you didn't have the technical analysis that you do today. Old time chartists would have to go out there and draw their own charts on a daily basis. So Buffett, as a value investor, just simply does not believe in technical analysis because he's not going to capitulate to short-term volatility, and neither should you on long-term investments. He's not a day trader. He's not a swing trader. He's a cash flow expert. He does covered calls. He's done naked puts. He's a takeover of companies type investor, and his time frame in a trade is not 20 minutes or 20 days, it's 20 years. So he doesn't care about the short-term volatility. He cares about the dividend. He cares about the cash flow. He cares about growth.
Last year on this exact date, I shared the meme on my Facebook page. Time is a flat circle, but gold always holds its value. I don't know if you remember that one.
I do remember that one.
Yeah, and gold actually from about last year till now, that's when it started to get interesting and started to come around a little bit. We got gold up right here, and it is running. It is bullish. It is an incredible juggernaut on the
volatile.
But it is also volatile. What's your read on gold, Matt?
Well, the read on gold is just the opposite of the read on the dollar today. This is what happens when the dollar goes up on economics. You see the decreased price action. You see a bearish retracement. I'm a little concerned if gold comes under that 1510 level. I would wait till the volatility of today kind of subsides before you're looking at any trades here. But playing a little defense, did kiss off the 9 here today. Just a little bit of downward movement in price on a positive economic data.
That dog likes gold.
That's Tim's dog.
That dog doesn't like the postal.
Is that Max
carrier.
Or Sadie?
That's Max. Sadie's
Max likes gold. Max says buy gold. That's what Max says. Buy gold.
Buy gold. Max is one of the dumbest animals I've ever known in my life.
Even Max recognizes how powerful gold is.
Listen, my dog.
Over the time Max decided to take a nice little dump around my entire house 10 years ago.
I like Max. I like Max even more after that started.
Literally from my bedroom all the way through the kitchen, he just kept going throughout.
Good for you, Max. Sometimes you gotta go.
Yeah.
Bullish markets on the stock market here today, volatility everywhere else, volatility around the board. By the way, U.S. oil is up like 4.5%. We got to bring this one up here next. It's pattern changing almost at some level here, Matt, if it continues. What is the strength here? Is this algos, this short covering? Is this other investors who are staying out of oil and now they're popping in here? This is notable. There's no doubt.
I need Mark here because I don't get this one.
Listen. It's like I said on the podcast yesterday and everything else. Oil is ultra sensitive to the trade war. Ultra sensitive. Maybe more than any other commodity outside of copper. You probably see copper having a big day today too. I haven't checked the copper chart today.
Yeah, it's up. Well, it's up 2%.
Yeah, but it is very, very sensitive to trade for. And like I talked about on the Trading Justice podcast yesterday, there are a lot of. In fact, this is my exact analysis yesterday on the podcast. There's a lot of positive, bullish things on the supply side. OPEC, their production numbers have been really, really down. They've been doing a nice job protecting the Saudi prince's, lifestyle in keeping and propping, and I don't even saying that jokingly, up. And then, and yesterday I said, but we got the trade war. And so you have this counterbalance. So we've had bullish catalyst in oil that have been subdued because of the fears of the trade war. And then with today's tweet, boom.
Yeah.
Everything takes off.
Yeah, it's taken off. There's no doubt about it. I'm not sure it's bullish yet from a pattern perspective, Matt. We still do have a lower pivot low. And even with this 4% rally,
that's a nice trend line you just drew there.
You kind of have neutrality, maybe even a bidirectional.
That is a nice trend line you just drew there.
Yeah. If that gets above that trend line, that's bullish.
Yeah, that's a nice trend line there. That's not all trend lines matter. That one matters.
I can definitely see a doji coming into tomorrow though.
No, yeah, absolutely.
Yeah, see kind of the market taking a little bit of a break.
And the reason that's a nice trend line is because it stands out and all kinds of people can see it.
Yep.
Like that's one of those trend lines where everyone will be like, oh, wow. That's just so.
I was looking for a bearish trade that never got triggered on crude. I might still be looking for a bearish trade, but you're above every one of those moving averages here. You're hitting your trend line. It's going to be a battle between the buyers and the sellers, but I think you're going to slow down a little bit, and then crude will decide which direction it really comes.
Oh, and make no mistake, oil is not ultra bullish.
No.
The fundamentals behind oil, it's more neutral. So, I mean, you've seen this song and dance. When oil elevates, that's the time to start looking for those bearish trades when it gets up to near those 2009 resistance levels. As long as the current fundamentals stay the same, elevation, there can be short-term bursts. Like if that trend line were to break, you'd probably see a nice $2, $3, $4 run, maybe even 5 or 6.
I wouldn't be surprised if it ding 60 if it breaks that trend line.
Yeah, I mean, very, very easy. But when it gets to those elevated levels, there's still global growth still stinks. And that really sums it up. Yeah. As long as global growth is having a hard time, oil really is going to have a hard time seeing those high levels that it saw in 2018.
Yeah, for sure. Quick peek at Bitcoin. And while we look at Bitcoin, Matt, we're going to get ready for rapid fire. If you know what rapid fire is, pop your symbol in. And it's where we just take a quick peek rapidly and give our analysis on any stock or any symbol that you guys add to the chat. We get through as many as we can. Bitcoin red candle here, Matt, kind of cementing a neutral range, in my opinion. Until otherwise noted, I'm still waiting for a trigger and confirmation one way or the other here. I know you don't touch Bitcoin. Any read on that chart?
No, I like I said, I've maintained this stash for a long time now. It's a day trading vehicle, or it is an investing vehicle if you believe in the holder philosophy.
Yeah. Hodl forever. All right, guys, rapid fire time. Let's rock and roll. Let's have some fun here. First one coming in here, ANET, and we are going to start with the host himself and the guy sharing the screen. Matt, you're up. ANET.
ANET bearish downtrend off a negative bearish movement, overextend to the downside, showing a little bit of a bullish engulfing candlestick pattern. I would not be looking to touch this in any capacity on the buy or the sell side until I saw a better technical setup.
And Cody, I'm going to get you in on this after myself. Mark, you're up next with Cummins, CMI, industrial play here. Obviously, some weakness. Mark, what you read?
Yeah, this is a nice bearish situation developing. I mean, industrial space going crazy because of trade war. All industrial companies pretty much taking off, but that chart's pretty ugly. Coming into some falling moving averages. Yeah, I mean, you get a nice doji the next couple days. That's a really nice short-term play.
By the way, we got 80 people here, only 27 thumbs up. Guys, give me a quick thumbs up before we proceed on rapid fire. If you're watching, enjoying our show, if you're Team Tackle, make sure that you get in there and share that information out there. So Cummins was the last one. I'm with you. I'm going to add that to a bear watch list. I like that. MMM, 3M, Matt, kind of a Dow component here. I'll take this one. Hitting support, you got a dividend payment coming up here. Obviously, there's potential weakness if you broke below support. The one thing I don't like about that chart on a breakdown, though, that tail tried to break down. It found the other support level, obviously bearish in general on that trend. Keep moving into Disney. Cody, you get the easy one. Disney.
Yeah, Disney's sitting at a long-term not a long term, but a lot of support right there at 135. If we can get some movement to the upside, I like it. As of right now, if you just want to buy it, hold it, sell calls against it, I'm always for that.
That's not an easy chart to analyze. I
I
thought it was.
that wasn't the easy
That's
one.
not an easy chart to analyze at all.
There's no trade there. Like
there's no directional trade there.
Directional trade there.
That's easy. It's neutral, right?
Yeah, you say it's easy because you say, no, there's zero trade there, but it's not an easy chart to analyze.
GH is next. Maddie, you're going to go back to you from Johnny. Johnny out there. I like this.
Johnny on the spot. I love
that's an easy chart to analyze.
That is easy peasy. Positive earnings report. Got overextended at about 110. Fade action retracement coming back down into 96. The old breakout channel. Inside candle trying to slow its momentum. What I love about it, you have the lows of the day that really kind of set up a pretty easy stop loss, as you can see right here at 96, double bottom over the last couple of days. Trigger would have to be updated just based on your own personal technical setup, but I could see a trigger above $100 here. You got a double top both days. It's a significant hold number. Maybe a trigger above 101 as you have the old level of support over here. But whether you want to be aggressive above 100 or conservative above 101, I like this technical setup here.
Step system setup right there. By the way, back on CMI, Steve Cyberson Jacobs here, obviously halftime crew. Steve, you're in here all the time. We appreciate you. He says inverted fly on that CMI, which actually does kind of make sense to me. Bidirectional, something like that. I'd have to price it out. That could make some sense to me, though. Roku, though, moving on through our analysis.
For an inverted fly on ticker symbol A.
I don't think so. Maybe.
I think it was because it's
all on the earnings coming up. I actually like Cummins as an inverted fly because it's in a technical pattern where I do expect movement one way or the other.
Straddle then.
Yeah.
Now what'd you do?
Yeah, I could understand an inverted fly here if you expect you got a market maker move of $4 versus $70. So that's about a 5.5% projection. If you, and again, you got big gap here. Got a pretty big gap there, smaller gap there. I could understand a fly here.
You know why Warren Buffett doesn't like technical analysis? Because as you get old, if you don't learn things at the start, see, I don't like butterflies, not because they're not interesting, not because they're not profitable, because I spent, 15 years learning other stuff that I'm comfortable and believe in. And then you hear butterflies and you're like, get off my lawn with your butterfly talk.
Yeah.
Let's talk something else. I mean, but that's what it really is. We get used to what we get used to.
You don't like butterflies?
Can't teach a dog new tricks.
I have other things I like better.
You might have some liquidity issues, Steve. That's the only concern I'd have on with the butterfly.
Back on rapid fire here, Roku, Mark. Obviously, this is one of the most fascinating companies in the marketplace, in my personal opinion. ROKU.
It's not boring.
It is on the top 10 traded list almost every single day. Mark, what's your read?
I mean, it's been momentum. I mean, we brought it up yesterday early in market session in the Traders Lounge as it was breaking up momentum. I mean, this is a pure momentum play. And so if you have experience, some people love momentum plays where a stock takes off, they play it above the high, they raise up stop losses, and they have a momentum playbook on how to play that. So some people love these type of stocks, but it is a pure momentum play right now. So if you don't have experience with momentum stocks, probably look somewhere else. But if you do, that's where it's at.
I think that's a candle you manage on if you did play that breakout and caught it. There's no doubt about it. But I'm with you. Momentum
I'm closing the trade on that. If I caught that momentum, that's an inverted hammer candle, overextended, terrible wick. You should see price coming back down.
Price action baby in the chat. Type in price action baby. That's something we podcasted on in the past. Alibaba, Matt, trade war sensitivity. I'll take this one. Obviously neutral, stuck in a range. You got earnings coming up here shortly. That would take note and take precedence almost on anything else here. NVIDIA, Gino, welcome to our show. As always, we've got the talent. We've got the theta maker, Gino Poor himself. Gino, what do you think of NVIDIA here?
Trigger below that little pivot a few days back.
Earnings
Coming up. Debit Condor.
Yeah, debit Condor, big price, probably liquid. Actually, it could play out that way. AWK, the old bag of tricks Gino has. How many tricks you got in that bag, Gino?
Over 30.
30 tricks in that bag.
A lot of butterflies, Mark.
Yeah. Cody, AWK.
AWK looks similar to Roku. It's up there at the top. If I would actually be looking to take some profit here, wait till it comes back down to about 118, and then look for a trigger to get back into it. Wait for a pullback.
And I think we've got just a couple more, Matt. I'm going to kind of handpick. Lewis, you've been popping in a lot of good symbols here. MELI for Matt.
MELI, post earnings volatility, craziness. Nothing to see here, Tim.
Yeah, I'm kind of with that as well.
And here's why I say that. The trigger above that level, what I mean, there's just nothing to see here. There's no triggers, tough trigger, tough stop losses. And, you know, I can't remember the symbol we were looking at, but easy triggers are very important. Easy stop loss placement is very important. And if you pull up a chart and you can't identify where to place a stop loss within like literally 5 seconds, you're looking at the wrong chart.
The last 7 days of price action is probably one of the most unique, interesting candle formation. I mean, that's chaos.
Yeah, it's crazy.
I mean, like that is a very, very unique candle formation. I don't know. Wow.
There's
Tough
no
trade.
name for it.
Tough trade there. There's no doubt about it. Two more real quick ones work for you, Mark, at WORK.
Oh, this is Slack. I love Slack so much.
But no, they have not had their first earnings date yet. Recent
No.
IPO, obviously, in a downtrend.
Wait for first earnings. Wait for trends to develop here. This is a company I really, really, really like. We use it internally at Tackle for our internal communication, and
It's a good product.
It's. I think it's changing the way companies communicate with internally.
It's a great product.
Yeah.
Awesome.
So, yeah, it's
No,
something
and,
I'm
you know, the
looking at
thing about
long-term.
it is like if you go to like HR departments are actually, you know, having Slack knowledge, not that I don't know if you need to have any Slack knowledge, but knowledge of Slack. I mean, you see this more and more in company lingo. I mean, it's kind of becoming
It's so
the
much
thing
better than email.
in company interpersonal communication. But that chart's ugly.
Yeah.
EA, last one, Matt, I'll take it. Actually, we'll give it to the talent. Gino, what's your read on the gaming industry right now? Video games.
Oh, perfect stock for tonight's coaches show. This is probably going to be one I use for the bag of tricks we're talking about tonight, guys. A promo for tonight's coaches show. We are going to be doing the call diagonal calendar, poor boys covered call, or otherwise known as the bull call spread diagonal. So this is a perfect one. Neutral, and I'll slightly trigger above the moving average. I'll be throwing a diagonal on that tonight at the show to show you how to milk the crap out of this thing, man. We're going to milk Electronic Arts, which is a local company here in El Segundo, California. Great company. Gamers love this thing. So earnings is over. How'd they do?
Does EA still make Madden?
Yeah.
Dude, I got to get the new Madden. We got to draft again. Remember the old when we used to like get the team and then we would let it like run through the computer?
What do you think I did last night?
That's one of my favorite gaming experiences of all time.
I literally drafted my first franchise last night in the last few years. I got bored.
Like you said that, Tim, is that EA Madden, but the gaming industry is so huge. It's growing faster than ever. It's not something of the past.
Yeah.
They're actually having their own Olympics, and it's going to be more popular than any sports.
Oh, there's gaming competitions right now that if you win it, like there's one going on right now that if you win it, you like win $1.7 million.
Yeah, exactly.
It's getting crazy.
Check this out. I had a meeting yesterday with the guy who follows this. There are over 100 and something million competitors just from China. Just from China. It's like 1/3 of our population are just gamers.
I think we need to issue some tariffs on those gamers.
It's true. All right, one last one, Matt, real quick. Scott here, veteran halftime crew. Give me Kronos, if you will, and just kind of break this one down.
Post earnings, Kronos showing a little bit of weakness, got a really strong level of resistance here at $14. This is a covered call stock. You can get 3-4%. If you're long-term investing here, just keep writing those covered calls to offset any degree of risk.
Is this the one you told me to sell a naked put on a few months ago?
At 14.
Correct. Yeah.
Yeah. You still cash flow though. It's a wonderful cash flow stock.
All right, that was my trade. Never mind.
Thank you, Mark. But at the end of the day, guys, there's a lot of risk in the marijuana companies. They were completely overextended based on the 2017 hype and craziness. I still see these things coming down a little bit more. I believe in the stock long term. If you're holding 10 years, don't worry about anything. Keep writing it out, writing it out, writing it out. If 13 is broken, you could add some insurance to the position, but there's no trade here. It's cash flow.
And by the way, make note, Tilray earnings tonight. So you're talking about industry risk as well.
That's right. Tilray does have earnings risk.
Yeah. Guys, that's our halftime report. What do we got to promote here today at Tackle Trading? Mark?
Well, Gino just did a great job on cue. Coach's show tonight. We have a Trading Justice podcast coming out. Well, it's not coming out. It's out. Go to tradingjustice.com. Most recent podcast. So Coach's show tonight. Podcast is out.
Cody, can you put the link into the Coach's show into YouTube so people could go right there right now?
That I can. Go grab that real quick before we get
awesome, guys. Register for it. If you're not registered,
for me.
jump in your free trial.
By the way, the Coach's Show is one thing that I'm loving about that page. I was looking at it. It's got the bull call spread from last week, the collar, the protective put. We're featuring different content. We did the step system courses throughout it. I love the new design of our Coach's Show. Gino, enjoy that tonight. Make sure that you bring the talent like you always do, young man. It's great to have you guys. Matt, great job today. Mark, great job today. We'll come back tomorrow and break the action down for you guys. If you're watching our channel for the first time, thumbs up.
Hey,
real quick.
Jeremy Johnson, you'll love Tackle Trading. If you're not a pro member, you can go get a 15-day free trial, so the cost is free, and you can get access to all of our content, which the amount of content we have at Tackle Trading, just from an archive perspective, will absolutely blow your mind. And if you just ask any pro member, the Tackle Trading's number one value is content delivery. We deliver more content than any other company you'll ever even imagine, and you all get that. It's a subscription at $99 a month, but you can get 15 days free just to kind of test it out. And you can go be a part of Gino's Coach's Show, see if you like what we do.
The CEO of our company doesn't even know the cost of our subscription.
97? Is it 97?
$97 a month. Give him $2 off right there. I like it.
Listen,
$2.
I'm going to raise the price to 99. You better jump on it now.
Get a 15-day trial, like Matt says. Just come and check it out. We always bring the value. And by the way, if you guys ever need anything out there, buzz Mark an email, team@tackletrading.com. He does a great job answering emails and helping you guys out. We'll be back tomorrow, guys. We are out.